Okay, when you picture a billion-dollar corporate fraud, what's the first thing that comes to mind? Probably some high-flying tech company, right? Or maybe a super complex Wall Street scheme. Well, what if I told you one of the biggest accounting lies in history came from a company that just picks up your trash? Yep. Let's dig into the absolutely wild story of the waste management scandal. Let's just start with the number, because it's a monster. $1.7 billion. That's how much Waste Management overstated its pre-tax earnings in just 5 years, from 1992 to 1997. And look, this wasn't some rounding error or a small miscalculation. This was a deliberate, massive lie that completely fooled investors for years.
And that really is the million-dollar question, or I guess the $1.7 billion question. How on earth did a company in such a straightforward, kind of boring business manage to cook its books on such an epic scale? The answer, it turns out, is both way simpler and a lot more sneaky than you'd probably guess.
So how'd they pull it off? Forget all the complicated stuff you see in movies, like shady offshore accounts. This whole deception was hidden in plain sight. They just took the basic, everyday tools of accounting and twisted them into weapons of fraud.
The first tool they misused was depreciation. Now, I know this sounds super technical, but the idea is actually pretty simple. If you're a business and you buy a big, expensive garbage truck, it doesn't last forever, right? Every year it gets older, it gets beat up, and its value goes down. That loss in value is a totally normal business expense. It's called depreciation. Every company with assets deals with this.
So here's how they turned that simple concept into a lie. Waste Management would take a garbage truck that, realistically lasts about 10, maybe 12 years, and they'd just say, nah, on our books, this thing is going to last for 20 years. So why do that? Well, by stretching out the lifespan on paper, you get to spread that cost over way more years. That makes your expense for each year seem a lot smaller, which, poof, magically makes your profits look way bigger.
And they didn't just stop there. Oh no, they also messed with something called salvage value, which is just what a truck is worth at the very end of its life. A normal company might say, okay, this old truck is worth a few grand in scrap metal. But Waste Management, they'd claim that same beat-up truck was somehow worth a fortune. The effect was exactly the same. It lowered their yearly expenses on paper and pumped up those fake profits even more.
So, you see, this wasn't just a one-time thing. It was their recipe for fraud, and they followed it religiously. Step 1. Pretend your trucks last forever. Step 2. Pretend they're worth a ton of money even when they're junk. Step 3. Just flat-out refuse to record expenses for assets that were literally worthless. And when you apply these little cheats across thousands and thousands of trucks and dumpsters all over the country, well, that's how you cook up a $1.7 billion lie.
Okay, so right about now, you're probably asking the exact same question I was. If this was happening year after year after year, where were the auditors? The watchdogs who get paid a fortune to prevent exactly this kind of thing from happening.
And this is where the story gets really frustrating. Because the auditors, the infamous firm Arthur Andersen, they weren't clueless. It's right there in the SEC report. They knew what was going on. They identified these improper practices, they wrote them down, but for years, they just failed to stop them. They kept issuing clean audit reports anyway. I mean, this is the textbook definition of auditors getting way too cozy with their clients. But here's the thing about lies that big. You can't keep them going forever. A house of cards built on fake numbers is always going to come crashing down. And for Waste Management, the crash was spectacular. Let's walk through how it all unraveled. The whole thing started to fall apart in late 1997. A new CEO came in, took one look at the books, and knew something was seriously wrong. By early 1998, the bombshell dropped. The company publicly announced it would have to restate years and years of earnings. Basically, they confessed to the fraud. And from there, the dominoes just fell one by one. By 2001, the SEC was charging the top executives, and by 2002, even the auditors were facing the music.
And the consequences were severe. I mean, look at this. The executives who ran the whole scheme got hit with over $30 million in fines and penalties. Back then, that was a huge sum of money. Even their auditors, Arthur Andersen, got slapped with a $7 million fine for their role in it. This sent a real shockwave through the corporate world. It was proof that even in a boring industry, the penalties for cooking the books could be absolutely massive. So why are we digging through a decades-old scandal about garbage trucks? Because honestly, the lessons we can learn from this pile of trash are more relevant today than ever, especially when it comes to understanding risk and how companies can go wrong.
So what are the big takeaways here? Well, first, and this one's huge, fraud can happen absolutely anywhere. It is not just a tech or finance problem. Second, these giant lies aren't usually built overnight. They're built from thousands of tiny, seemingly boring deceptions that add up over time. Third, auditors can fail. They're human. You have to maintain a healthy dose of skepticism. And finally, and this is so important, just because a company seems stable and predictable doesn't mean it's safe. In fact, sometimes that's exactly where the biggest risks are hiding.
Which really brings us to a final, crucial question to think about. We spend so much time looking for risk in flashy, high-growth companies, but maybe, just maybe, the real lesson from this billion-dollar garbage pile is that we're underestimating the danger that's hiding in the most overlooked, boring corners of the market. It's definitely something worth thinking about. Thanks for joining this explainer.